Hello, this is Yuki Un, Certified Public Accountant at Samdok Accounting Firm. In this lecture, we'll take a close look at local accounting practices, financial management, and fiscal operations in Tanzania. Before we begin this lecture, let us first examine the definition and importance of accounting. Accountability encompasses not only bookkeeping, but also budget planning and expenditure control, to expense verification, financial reporting, and performance disclosure across all financial processes. It defines the standards by which an organization protects and takes responsibility for its financial information. The four core principles are transparency, accuracy, stability, and responsibility. Based on our analysis of KOICA's partner institutions, it appears that some aspects of accountability are currently lacking across these dimensions. This deficiency can lead to financial leakages, loss of institutional credibility, declines in operational performance, and rising administrative costs. Therefore, enhancing accounting accountability is essential. From this point forward, we will provide detailed information on accounting and financial practices in Tanzania that NGOs operating in Tanzania must understand and manage effectively. First, the accounting standards applicable to non-profit organizations in Tanzania are based on IPSAS. All NGOs and associations are required, under the directive of the National Board of Accountants and Auditors, to comply with IPSAS, the International Public Sector Accounting Standards, starting from July 1, 2021. By applying IPSAS, NGOs can strengthen their internal control systems and ensure greater financial transparency and accountability. Since IPSAS was developed specifically for the public sector into closer alignment with international accounting norms. Of course, not all large NGOs operate under the same structure or scope of activities. That's why there's a growing discussion around developing simplified accounting principles tailored for small and medium-sized non-profit entities. Under IPSAS, the core components of a non-profit organization's financial statements consist of 6 elements: the statement of financial position, the statement of financial performance, the statement of changes in net assets equity, the cash flow statement, the statement of comparison of budget and actual amounts, the accounting policies and notes to the financial statements. The sample shown below includes templates for the main statements, excluding the accounting policies and notes. Under IPSAS, the fiscal year runs from July 1st to June 30th of the following year. All registered NGOs in Tanzania are required to pay annual membership fees through the National NGO Information System. Additionally, any organization with annual revenue exceeding 11 million Tanzanian shillings must acquire an electronic fiscal device and issue electronic fiscal receipts as part of its statutory obligations. When operating a non-profit organization in Tanzania, there are several key accounting and compliance requirements to be aware of. Broadly, these can be categorized into 6 areas: taxation, annual reporting, financial disclosure, regulatory compliance, NGO Coordination Board requirements, and Auditor General requirements. Let's start with taxation. Every NGO must obtain a taxpayer identification number and complete taxpayer registration within 30 days of establishment. For income tax purposes, organizations are required to submit their final return form to the Tanzania Revenue Authority within 6 months after the end of the fiscal year. Even if the organization has no taxable income, a zero-income declaration must still be filed. As for value-added tax, it must be declared and paid by the 20th day of the month following the end of each taxable period. This filing is mandatory even if there is no tax payable for that period. For estimated income tax, NGOs must file an SOETP form based on projected annual income and are permitted to make payments in 4 equal installments throughout the year. Any delay in payment is subject to a statutory interest rate of 2.5% per month. Next, let's move on to annual reporting obligations. All NGOs registered with the Tanzanian government are required to submit annual financial statements at the beginning of each year. Failure to do so within the deadline may result in deregistration. In addition, NGOs must present activity and performance reports to their boards and relevant stakeholders, and submit audited financial statements to the NGO Registrar's Office. When preparing these annual reports, consistency is key. Use uniform terminology that accommodates various stakeholders, and make sure that data sources are properly cited. Furthermore, reports should include both the positive and negative outcomes of projects to ensure objectivity, transparency, and credibility in financial communication. The image displayed shows the format of an annual report for reference. Next, let's move on to the internal audit and financial reporting requirements set forth by the National Audit Office of Tanzania. Non-profit organizations are required to conduct regular financial audits and submit their audit reports to both the President and Parliament to uphold public transparency and accountability. All fundraising activities must be conducted through legally approved methods, and NGOs are obligated to inform donors of the intended use of funds and the identities of beneficiaries. Furthermore, NGOs that receive foreign or secondary-level funding are required to register with the Tanzania NGO Coordination Board in accordance with national regulations. Finally, let's review the requirements of the Tanzania NGO Coordination Board and other government regulatory obligations. All NGOs must register with the Coordination Board and renew their certification every 10 years. In addition, they are required to submit annual activity reports and audited financial statements. The following are government and regulatory requirements. From now on, it's the financial management part. The process for opening an account locally is as follows. Tanzania's financial environment also supports mobile money services operated through local telecommunications providers. Because traditional bank accounts often involve maintenance and transaction fees, many organizations prefer cash transactions. However, mobile transfers are becoming increasingly common as a way to reduce the risks associated with handling physical cash. To address the limitations and risks associated with cash-based transactions, mobile money transfer systems have been gradually adopted across Tanzania. There are currently 3 major telecommunications providers offering mobile financial services, so it's important for NGOs operating locally to be familiar with them. Now, let's move on to loan options for non-profit organizations. While NGOs typically rely on donations and grants rather than generating commercial income, obtaining loans is not entirely out of reach. In most cases, these loans take the form of interest-free or concessional funds, which are designed to provide financial support to vulnerable or underserved communities. One prominent example is the Pass Trust Credit Guarantee Scheme, which offers loan guarantees to enterprises and individuals participating in the agricultural value chain. Non-profit organizations that operate in the agriculture sector and meet the necessary legal and business requirements may qualify for financial support through the Pass Trust Guarantee Program. The required documentation for NGO loan applications can be found in the reference materials provided. Next, let's go over the local exchange rate system used in Tanzania. The weighted average exchange rate is calculated by taking the average of multiple remittance rates, weighted by the proportion of each transfer amount. In contrast, the remittance date rate applies the exchange rate in effect at the time of each transfer, when converting expenditures into local currency. Typically, currency conversion follows this sequence: Korean won to US dollar per Tanzanian shilling. The monthly average rate refers to the average rate officially published by reputable financial institutions, usually banks, within that month. Lastly, the exceptional rate, noted as individual rate, is used only under special circumstances. Although it can be applied in rare cases, it is generally discouraged due to its potential to disrupt reporting consistency. Using individual exchange rates is not recommended, as it undermines the consistency and comparability of financial reporting across the organization. For official development cooperation, project expenditures, all foreign currency transactions must be converted and reported in Tanzanian shillings using one consistent method, either the weighted average rate, the rate at the time of remittance, or the monthly average rate. While this rule is not mandatory for other operational activities, it is strongly advised to apply the same exchange rate method throughout all reporting to maintain uniformity. Now, let's take a closer look at the weighted average rate in practice. This rate is calculated separately for the first and second halves of the fiscal year. Each half-year's rate must be applied until all funds from that remittance period are fully utilized. For example, if part of the first half remittance remains unspent in the second half of the year, that balance must still be converted using the first half weighted average rate. As a precaution, all conversions and reports must be accompanied by supporting documentation. Additionally, rates must be clearly distinguished and applied by quarter. In Tanzania, the banking system undergoes frequent structural and regulatory changes, which often make it difficult to obtain official exchange rate documentation at the time of remittance. In the past, local offices used bank-issued transaction statements as supporting evidence for foreign exchange conversions. However, beginning this year, these statements may only be used for internal reference purposes, which has made securing official verification even more challenging. To address this issue, 4 practical measures are recommended. First, use internationally recognized exchange rate platforms, such as OANDA or xe.com. These sites provide real-time currency data and maintain historical exchange rate records, which can be used to substantiate conversion calculations in financial reports. Second, establish formal agreements with local financial institutions to obtain certified transaction statements in English. For example, World Vision Tanzania has partnered with ABSA Tanzania to issue official English-language financial records that meet international audit standards. Third, create dedicated reserve funds to absorb potential exchange rate losses. An example of this is Save the Children, which automatically transfers any foreign exchange differentials into a currency reserve fund during remittance. This approach helps mitigate unexpected currency fluctuations and supports stable fund management in international development projects. Finally, establish a reporting framework for exceptional cases where official documentation cannot be obtained. For example, UNICEF manages situations where official exchange rate documentation is unavailable by preparing an explanatory report that outlines the context and rationale. This report serves as supplementary audit evidence, allowing auditors to cross-verify financial transactions and attach it alongside official supporting documents in their final submissions. By implementing practices like these, organizations can mitigate weaknesses in the local exchange rate system and contribute to building a more stable and reliable financial management environment. Lastly, let's go over the eligible supporting documents required for financial settlements in Tanzania. Acceptable forms of evidence include invoices, tax receipts, payment vouchers, bank statements, and utility bills. Among these, the supplier-issued invoice serves as the primary supporting document for transactions. Tax receipts must follow the official format approved by the Tanzania Revenue Authority. When payments are made in cash or via bank transfer, a payment voucher must be issued. For bank or card transactions, bank statements are considered valid proof of payment. Failure to secure proper supporting documents may result in disallowance of expenses during financial settlement or audit review. Therefore, maintaining complete, accurate, and compliant documentation is essential. The materials displayed here are sample documents, including an invoice and a tax receipt.